Hey everyone, welcome back to Corporate Decoder. Get ready because today we're diving into the financial reports of BlackRock's iShares ETFs. And trust me, there's more than meets the eye with these money market funds. Stick around to spot if BlackRock is making more than you think off your investments. Check out Discord to see more details about this report. Today we are decoding the shareholder reports for iShares Government Money Market ETF and iShares Prime Money Market ETF, both for the 6 months leading up to April 30, 2025. These reports tell us what the funds invested in, how much it costs to run them, and how they performed. It's basically a health check for your investment, so let's dive in and make sure everything looks good under the hood. First, let's look at the iShares Government Money Market ETF. Ticker symbol GMMF. Remember, this fund focuses on government debt, aiming for stability. What does it cost to play this game? For every $10,000 you have invested in the iShares Government Money Market ETF, it costs you $5. The report mentions that this covers the period starting February of 2025 when the fund began running. The annualized cost, that is the cost if you hold it for a full year, represents 0.20% of the investment every year. Now for the important part, how much money did it make? The 7-day SEC yield for the money market is 4.1%. So where was this money invested? A large portion, or 43% of the fund's money, was in something called repurchase agreements. These are basically short-term loans backed by the securities. Another 37% was in US Treasury obligations, that's investments directly in the US government debt. Another 23.4% was in US government-sponsored agency obligations like bonds from government-backed entities. Now let's move on and see how the iShares Prime Money Market ETF, ticker PMMF, is doing. This fund can invest in a broader range of assets, including corporate debt, which generally offers a bit more return, but also a bit more risk. For every $10,000 you have invested in the iShares Prime Money Market ETF, it also costs you $5 each year. Just like the other fund, its annualized cost is around 0.20%. The 7-day SEC yield shown for this fund is a bit higher at 4.31%. This higher yield reflects it taking slightly bigger risks by not investing in government bonds only. The investment mix is quite different here. Almost 51.5% is in repurchase agreements again, but commercial paper is at 23.8%. This refers to short-term debt issued by corporations. Another 22.1% is in certificates of deposit or CDs. And a tiny bit, 0.4%, is in corporate bonds. Both funds show transactions with affiliated entities, specifically BlackRock cash funds. What are those? Those are used for securities lending, a regular wealth generator technique among ETFs. How exactly is this done? The fund lends its securities and the broker brings collateral. As part of that, the fund invests those assets further, and as a result, the returns are increased. The report also mentions what could go wrong. Both funds acknowledge they're subject to something called significant shareholder redemption risk. What does that mean? Basically, it means if a big investor pulls their money out, the fund might have to sell its assets quickly, which could lower the price and hurt everyone else. If you want full details, BlackRock always has you covered and says all this info available in BlackRock.com fund reports. Scroll, state, elements of asset scroll, SIB, now to the actual financials. First, we will look at the money coming in and out as well as total holdings and net asset value. At the end of April 2025, iShares Government Money Market ETF had around $42.20 billion in assets, and the iShares Prime Money Market ETF has $185.85 in IDR profiles. Scroll iShares Government Money Market ETF shows total investment income equal to $333.554 and iShares Prime Money Market ETF saw 1,441,209 over basically the same time period. Scroll EL becomes scroll expenses for the management of the funds are only $15,180 and seeing $572 respectively. Over the period, that's it. With expenses, it seems to be pretty much an automatic running machine. The result is net investment income of $318,366 and $1,377 and $637 95% of the income ends up with the user. Thus, the 95% of the income ends up with the user too now. Having reviewed all the information, we can try to form an objective picture and opinion. First off, the investment strategies reflect differences in risk appetite. This is great. It lets various investors find what they want. In general, both funds seem relatively well managed. What are possible risks? Or that securities lending activity means counterparty credit risk is something you should look at every time. BlackRock's name is big, but you are still trusting those corporations to not default. So keep in mind those counterparties in the repurchase agreements. What are the fees? The fees for the funds overall appear really competitive. So should you buy these iShares money market ETFs? It really boils down to what you want. Are you satisfied with an incremental steady increase over time? Or are you looking into taking more risks for a higher profit? Alright, so that's our analysis of these iShares reports. I hope it helped cut through some of the financial jargon. Which fund would you trust with your cash and why? Let me know your takes in the comments. It always sparks awesome discussions. If diving into these documents was helpful, then hit that like and subscribe for more. And don't forget to swing by the Discord server linked in the description. That's all for today. Thanks for watching.